Have you ever opened up your trading platform, thrown on the Fibonacci tool, and just stared at that absolute mess of lines and colors thinking, what am I even looking at? Yeah, you are not alone. But what if I told you that in just the next few minutes, we can take that chaotic tool and turn it into your single most powerful weapon for finding incredible trades? Well, stick around, because we're going to tame this beast and we're going to do it together. So look at this. On the left, you've got the default setting. It's the chaos that most traders are stuck with, right? It's just this explosion of information that actually hides the good stuff. But on the right, that's where we're going. That's pure clarity. Every single line has a purpose. And don't worry, I'm going to show you exactly how to get there, step by step.
All right, let's get to work. Time to roll up our sleeves and really get under the hood of this thing. This first section is all about the setup. We're going to tune this tool, strip out all the useless parts, and supercharge the bits that actually matter so it starts working for you, not against you.
First things first, we have to eliminate the noise. So go into your fib settings right now. We're going to uncheck all those crazy extension levels way past 100%. For what we're doing, we just don't need them. Next, turn off that distracting background color. Your chart should be the background, that's it. And finally, go ahead and switch off the price labels. We want to see percentages, not prices. It just makes everything cleaner.
Okay, now let's make the important stuff impossible to miss. In your settings, switch the display from values to %. It's way more intuitive for this kind of trading. Now, move those labels over to the right side. This keeps the current price action completely clear. And here's a little pro tip. Align them to the middle of the lines. It just gives you this perfect visual balance. And last but not least, don't be shy here. Crank that font size up to 20. When you're trading, you need to see what's happening in a split second. This makes it effortless.
Now for the most important step of all, and this is really the secret sauce. We're going to color code for importance, because not all these levels are created equal. So make your boundaries, your 0 and 100 lines, make those black. Just leave the 38.2% orange, that's fine for a shallow pullback. But here it is, the 50 and the 61.8% levels. You're going to change both of those to a bold red. This is like a trigger for your brain. When price gets into this red zone, it visually screams, pay attention. Oh, and make all the lines as thick as they can go. We want these levels to just jump right off the screen at you. And that's it. Seriously. Take a look at your tool now. It's clean, it's clear, and it is built for one single purpose, to help you pinpoint high probability areas to enter a trade. You've officially got a professional grade instrument right there on your charts.
So, we've built this high performance machine. Now we need to learn how to actually read the map. Why did we make those specific levels red? Because they form what pros call the golden zone. Understanding what this zone is and why it's so powerful is the key to everything. Just think of it like this, okay? If the price pulls back to the 50% level, that's good. That's a nice deep pullback. If it goes all the way down to the 61.8, that's even better. That's a fantastic value opportunity. But the space between 50 and 61.8%, that's the great zone. That whole area is the statistical sweet spot. It's the highest probability area for a trend to resume its direction.
You know, these levels, they're not magic. They represent areas of value inside a trend that's already happening. This is where the big boys, the huge institutions, are looking to add to their winning positions. Just let that sink in for a second. These lines, they're like footprints. They show us where the big money is likely to step in and defend a price. Our job isn't to fight them, it's to ride their wave.
Okay, theory is awesome, but we're here to make money, and that happens in practice. So how do we actually draw this thing on a live chart to find these value zones? Let's get into the mechanics.
So before we can draw it, we have to know what we're trying to measure. You've really only got two basic moves in the market. You've got the impulse move, that's the big, strong, powerful push in the direction of the trend. And then you've got the corrective move, that's the pullback, right? It's the little breather the market takes before it continues on its way. Our entire goal here is to measure that impulse move to predict where the corrective move is likely to end. Now this is probably the most critical mechanical skill you need, and thankfully, it could not be simpler. In an uptrend, you're always measuring that main push-up. So you click the most recent swing low and you drag it up to the most recent swing high. In a downtrend, you do the exact opposite. You measure the push down. Click the swing high and drag down to the swing low. Just burn this into your brain, low to high in an uptrend, high to low in a downtrend. You have to get this right every single time. Now, here's a huge point. Just because the price hits our red zone, it does not mean we automatically smash the buy or sell button. That's not trading, that's gambling. Professional traders, they wait for confirmation. This next part is all about how you can stack the odds in your favor.
So let's ask that critical question.
Price is pulled back perfectly. It's sitting right there in your 50 to 61.8 zone. It is so tempting to just jump in, right? But how do you know the pullback is actually over? How do you know the trend is ready to go again? How do you avoid catching a falling knife?
You wait for proof. Here's your 4-point inspection list. First, look for a candlestick reaction. Are you seeing long wicks? That shows rejection. Buyers are stepping in. Second, wait for a confirmation candle. A big, powerful green candle that says, okay, the momentum is shifting back. Third, look for chart patterns. Is a classic double bottom forming right there in your zone? And finally, and this is the best one, does your fib level line up perfectly with a major pre-existing support or resistance level? If it does, that is a huge, flashing sign.
Look, the key takeaway here is this. Always add at least one other reason to take the trade. We call this confluence. It could be your Fibonacci level plus a candlestick signal, or Fibonacci plus a support level. By adding that +1 factor, you dramatically increase the probability of your trade working out. Please never rely on the Fibonacci tool all by itself.
Okay, let's bring this all home. We've built the tool, we understand the theory behind the golden zone, and we have our confirmation checklist. Now, let's just recap the core philosophy that really makes this whole thing work. And this right here is the most important mindset shift you can possibly make. We are not fortune tellers. This tool is not some crystal ball that predicts the future. Think of it more like a high-tech map. It just shows us the high probability spots within a trend that's already happening, spots where the big money is likely to defend their positions. We are not predicting, we are preparing to react with the pros. It's all about playing the odds, not guessing the future.
So there you have it. You've got the settings, you've got the strategy, and you've got the professional mindset. Your Fibonacci tool is no longer a source of confusion, it's an instrument of pure clarity. So my only real question for you is this. Go open up your charts. Where are you going to find your first area of value? Thanks for tuning in.